Hey guys, welcome back to another episode of the Mogul Marathon Commercial Real Estate Podcast. I'm your host, Cudjoe-Virgil, and I'm very, very excited for our guest today. Today we have an experienced multifamily investor. He knows how to transition from smaller to larger deals and can certainly help you on your journey today. So his name is Lee Yoder. Now, Lee was practicing physical therapy when he first realized his true passion was building his own real estate business and investing in real estate. And today, Lee is focused on syndicating larger apartment buildings and is the founder and visionary of Threefold Real Estate Investing. Lee is committed to using his God-given gifts to forge a path that will generate incredible opportunities for all involved. His focus is driving the business forward by establishing new relationships with top-notch professionals in the real estate world and bringing on more partners to invest alongside Threefold. Lee also hosts a podcast, Threefold Real Estate Investing, and Lee and his wife Hannah currently reside in Ohio with their 2 children and many farm animals. And when Lee is not working in real estate, he enjoys spending time with his family, working to build their homestead and cheering on the Buckeyes and Bengals. Lee is a man of faith whose greatest desire is to reflect God to his family within his business and to all those God places in his path. Wow. Lee, thank you so much for being a guest on our show.
Yeah, thanks for having me, Yannick. Really excited to be here. I gave you a lot there. You really read through a lot. I should trim that down.
No, man, it's amazing. It's always great to really learn about our guests. I think our audience really resonates with that. Before we dive into your experience, your background, maybe give us 1 or 2 points on your background, your story, and how you got to where you are today.
Yeah, sure, man. I like telling my story because I did nothing special. I didn't play in the NFL or anything like that. Just a more normal upbringing. And so anybody can follow my path, Yannick. I did go to school for a long time. You and I, you were on my podcast, great episode. We were talking about, Rich Dad, Poor Dad, that book had an effect. I was really going the Poor Dad route for sure. So I went to college for 7 years. To be a physical therapist these days, they make you get your doctorate. So I had to get my doctorate in physical therapy. But pretty quickly, Yannick, I just felt like I just wasn't that passionate about it. And I'm like, this isn't what God created me to do. And so the company I was with at the time, after just 2 years of being into physical therapy, having graduated 2 years before, I was with a startup company. I came into the office. I actually wasn't doing any more physical therapy. I was more like just helping build out a division within the startup company. And I was loving that work. And I was not missing physical therapy. So I'm like, man, this is what I like. And it was the first time I was like realizing I'm kind of an entrepreneur, or not kind of, but I am. And I was doing entrepreneurial type stuff within the startup company. But the problem with that, Yannick, is that, it kind of typical sometimes is like climbing the corporate ladder. My wife and I were starting a family, and it was just like more and more and more time at work devoted to my job, which again, I enjoyed the work, but I didn't enjoy the consuming nature of it and how much I was away from my family. My wife and I were just starting our family at the time. We had 2 young kids. And man, for us, we felt called to like be around our kids a lot and make that the priority. And so the career path I was on wasn't going to do that. And so I just started looking around like, what else is there? And that's when I found books like Rich Dad, Poor Dad and realized there's a different way. There's a different game to be played. There's a different game than just, do as well as you can with your company so that they promote you, which just probably means you got to work more time. I know for me, moving toward a promotion, that's what it meant. I talked to the VP of the company, and he was like, yeah, you got to be here more when you get that promotion. You're going to be here later at night. And it was like, that's just not what I wanted. So there's another way out there. And real estate really spoke to me. My dad's in construction. That's what he's done. My whole life, I've done some construction myself. So just a lot of ways real estate spoke to me. But even more than that, Yannick, it was like, I think this entrepreneur thing is for me because I love to work. I love to get after it, but I want to be able to control it. And so it felt like, man, if I kind of do my own thing, I mean, I'm all about like with the company I was with, I was getting up at 4:00 in the morning because I was like, well, that's a way for me to do more work, but not miss time with my kids because they're asleep at that time. So I'm more of an early bird rather than night owl. So I would go to bed, early with my wife, but I'd get up super early, try to get in a couple hours of work before anybody got up. And so I'm up for doing that, but then that means I want to get off earlier, so I can spend time with my kids, right? So that was what kind of sparked my interest. Like, I think there's a different way to do things where I can maybe get into this entrepreneurial thing and control my time. So work really hard, work a lot, but control it and do it when I want and be flexible and do it, work around my family's schedule, not the other way around. And so at the end of 2016, I left the corporate world, went back to doing home health physical therapy, where it was kind of this more relaxed, flexible job that I didn't love. Like it was kind of boring to me. But I started real estate as a side hustle at that time. So that was kind of how I got into it and why I got into it.
That's perfect. That's perfect. I think a lot of our listeners can certainly resonate with your transition, right? Because when you're climbing the corporate ladder, like you said, you are on someone else's time, and you just don't have that freedom. You just don't have that bandwidth to just drop everything and go to a kid's football game or a recital or something like that. You're on someone else's time. So that's exactly why I got into real estate as well, was I get to control my time, and there's responsibilities that come with that.
For sure.
But I think that's why all real estate investors get into real estate. So
it's a great benefit.
So okay, fast forward, you started investing in real estate around 2016, right? Did you start off in the single family space and then graduated to multifamily? Like, what was that progression for you?
Yeah, just a real quick timeline, Yannick, and then we can dig in wherever you want to. I left the corporate space right at the end of 2016. It wasn't until the fall of 2017 we bought a single family home to flip. So we did a flip in our hometown where we live here in Southwest Ohio. In 2018, that next fall, I bought a duplex. Basically flipped that, but had it rented for a little bit. So we had some renters and saw that proof of concept that, like, okay, this is investing. Flipping is not investing, but this is investing. We're making money each month. But then ended up selling that. And then the next fall in 2019, we got an 8-unit, a 10-unit, and a 16-unit, and got all of those at the end of 2019. Owned all those for a year. Started selling them at the end of 2020 and the beginning of 2021. Sold all 3 of those. So went from 34 units back to 0. But that allowed me to quit my job. I quit my W-2 as a physical therapist at the end of 2020. Jumped all in. And in 2021, started syndicating. We got a 45-unit, a 47, and a 96-unit in 21. And then we bought a 95 unit last year. Didn't buy anything for a whole year until we just closed on a 64 unit.
Yeah, that's awesome, man. That's awesome. And that growth of starting into the starting in the single family space to small multifamily to large multifamily. Did you feel like you should have jumped in the large multifamily first, or did you feel like that was the right progression for you at that time?
Yeah, good question, man. Because I pretty much knew I wanted to be in multifamily, and I knew I wanted to be in bigger multifamily, but I did have some limiting beliefs. But I also think you need a track record before you raise money from other people. So you can get that 2 ways. You can either partner. So you've got some experience now. You've syndicated some deals, and so a year from now, you're crushing it. If I come alongside you and I borrow your experience and your track record, that's fine. So that's one way. So you can go partner with somebody that has a track record, or you got to get it yourself. And so the way I got it myself was I did a flip myself with my own money. And then I did a duplex myself with my own money. And then once I got into the small multifamilies, I did start using other people's money, but it was like my family, the people that were willing to bet on me before I really had a track record. And then we did those 3 small multifamilies, sold them all. And now I had a track record. So now I could go to people. So I knew that's where I wanted to be. And I think I wish I would have gotten there quicker, but I think there was ways to maybe speed it up a little bit. But I think you need a track record first. I think you got to cut your teeth with some of your own money, or maybe just your parents' money. My in-laws were a pretty early investor. My best buddy from church. I think that's a good way to go, to cut your teeth and build it up. What you did, you could go and work in the industry, and so that's kind of a track record, at least, of being in the industry. But I didn't have any of that, so I think you got to have a track record, or you got to lean on somebody else's track record first.
Yeah. There's no substitute for track record. I say that all the time. That it could always help you. It can never hurt you, right? By actually doing something. And I think a lot of people try to go to do like their first 200 unit deal their first time around, and there's nothing wrong with that. But I think to your point and mine as well. Our first deal was an 18 unit deal. right? And we would love to do a 180 unit deal, right?
Yeah.
Because
Yeah. Me
scale
too.
is much
Yeah.
better. Everything
Yeah.
is much better when you're doing the larger deals. But that track record means so much because
Hmm.
first it allows you to overcome the imposter syndrome, right? Of you
Yep.
thinking that you're not good enough to actually do the deal. I
Right.
think that those small bite-sized chip aways at like doing some smaller deals to get that confidence. I mean that's still a good progression to go to eventually get up to where you want to be. Is
I
my
think
point.
so. Yeah. Yeah. I agree.
So tell us about how you were like structuring some of the smaller deals. Was it like joint venture?
Yeah.
Was it just kind of like your own? Like how did you structure those?
Yeah, just simple joint ventures, man. I think it's a great way to get started. So, yeah, literally on the 16 unit, just brought in one partner. I gave them 50. They brought all the money. We needed $100,000 for that deal. So they bought that, gave them 50%, and I got 50% because I found it. I put it together. I did all the work. I mean, they were involved. If you're doing a joint venture, technically all parties have to be active, and they were, but I did 95% of the work, and they were active, but I did most of it. So I got 50% for all that, and they got 50% for bringing the money. We
Yeah,
got the 8 unit, same thing, buddy. That was a little bit different. So it was a buddy of mine from church. We each put in like $30,000. I got 55% because I did more of the work, and he got 45% because he wasn't doing as much. And then the 10 unit, that same buddy and my parents, they put up all the money. I kept 50 and gave each of them 25. So it's a
yeah,
great way to do it, man. If you can find somebody that says, "Hey, I got the money, I don't have the time or the knowledge, the hustle, whatever," and the other guy or girl has all hustle and experience and networking and all that, but no money, it's a perfect match. And that's kind of what we did on those first few to get us
yeah,
going.
yeah. And it's also less expensive to put those deals together, right? I mean,
Yes, for
syndication
sure.
costs you're just
Yeah,
for an SEC attorney,
simple,
you're
man.
spending an easy 10 grand on that, and there's a
Yep,
securities risk that comes behind that as well. So
for
I think there's a
sure.
lot of benefits to doing joint venture deals, and I mean you get a bigger piece of the pie also, right?
Yes. I
On
would still
smaller
be doing
deals.
joint ventures if I knew guys and girls that wanted to put $2 million into a deal. Yeah,
Yeah.
I'd still do it. Yeah,
Absolutely, absolutely. So, touch on like that progression from like an operations perspective, doing
yeah,
smaller deals to larger deals, because there is a clear difference on how you're a little bit more nimble on the operations with larger deals than you are with smaller deals. The budget is a little bit smaller
yeah,
on some of
yeah.
those smaller acquisitions. You're not able to hire people, but I guess from your perspective, how did you guys, what did you guys shift maybe operationally, when it came to doing larger deals versus like smaller acquisitions.
Yeah, I think it comes down. It's the same thing. A lot of people will explain the single family dilemma that like single families can be a great investment opportunity, especially if you just want to park some money and hold long term or something. They're going to appreciate you buy in a good area, and you might get a resident stays there for a long time. So I'm not saying that's not a good investment, but what you run into is if you want to scale and you say, well, I want 20 units. Well, if you're going to do it with a single family, you're gonna have 20. I mean, you're not gonna buy them all in the same neighborhood. They're gonna be spread out all over, and that's if you can find 20 in one city. They might be spread out between different cities. So that's really hard to manage for a property manager. So let's say I'm doing it myself. If I've got the vacancy, I'm going anywhere all over the city just to show one unit at one house, right, in 20 different locations. My maintenance guy, he's got 20 different locations all over the city. Like it might be enough work to keep him busy, but he's going to spend half his time driving, right? Because it's all over. Versus now, imagine 20 units in one area. He's got one property to go to. I've got one property to show units. There might be 2 units vacant at the same place. You can be working on both of them, right? Or 2 maintenance requests at the same place. And it's so much easier to manage. And so if a 20 unit's easier than 20 houses, well, then a 100 unit's easier than 520 units, right? Just the more you go up. And so we've just seen that like even with those small ones, we use a third party professional property manager, and they were good, but you know, they managed all small stuff. And I just saw like it's hard. It's hard to manage a bunch of properties. They managed like 1,000 units, but they didn't manage any 100 unit properties. So those 1,000 units might have been 100 different properties, maybe 200 different properties. So they are going everywhere. And to get somebody to come out, just for one showing, or to get a guy come out to my 8 unit down here for just one maintenance call. Like, it's difficult for them to manage all that, and it's expensive. And so that's what we've seen. The more units we've gotten in one location, it's easier to manage it. We're now managing ourselves, but I saw it with them and I see it with ourselves. Like, just the more units you have in one area, just the economies of scale. Likely, when your maintenance guy goes out, likely he can, if he waits maybe just 2 or 3 days, there's likely going to be 3 maintenance calls at the same building. So you go out and you take care of all 3, and his time is so much more efficient, right? He's not driving between them. And same thing, if, at a 100 unit, Yannick, like 5 vacant units at any given time is fine. That's 95% occupancy. That's a good number. So you can be showing multiple units at the same time and just, turning multiple units at the same time. It's much more efficient. So we've just seen that the more units we can buy in one area, it's easier for a property management company to manage if we're having them do it, and it's easier for us to manage if we're doing it ourselves.
Yeah, I completely agree. Completely agree. I think that you definitely first and foremost should have a property manager that can handle your specific unit count, right? So you don't want to have like a huge a huge property management company managing like 10,000 units, managing like your 20 unit property, because you're never going to be paid attention to.
Right.
And then you don't want to have, in your situation, a property manager that can't really manage an 8 unit because they're so spread thin. So I think that the larger properties are certainly where you really want to be, because you can have people on site that's dedicated to your property.
I know.
I think that's probably one of the biggest differences from an operations perspective. Is that, when you're doing smaller opportunities, you kind of sometimes might have to like piecemeal the operations, right?
You're sharing people.
Exactly.
You're sharing with other properties, right? Yeah. Well said. Yeah.
And so 100%. I think with the larger deals, you get to have people on site that are just dedicated, like they answer to you and no one else.
You're not sharing
so
them.
I really, really, really love that you were able to make that jump into the next phase, which is larger opportunities. So are you seeing, or like, as we, talk today, we're in June 2023, rents are like, plateauing in some markets.
Mm-hmm.
It's certainly not as high as, when COVID, started, maybe 2020 going into 2021, we're seeing rents come down to a more normalized like level. So I guess my question is, within your operations, what are you guys doing to kind of counteract that, or make sure that your properties are full? Because we might be in a situation where, the economy might be turning around, people's budgets might be pulling back, and, they're looking for ways to, save on costs, right? So I guess from like a tenant retention or just operations perspective, what's your plans for the future on handling that episode if it does happen?
Yeah, absolutely. I will say, like, we've already kind of downshifted a little bit, and we're really pushing that to our property managers to say, because you're right. I mean, I think back to last summer, we had just taken on a 95 unit in Cincinnati, Ohio, and we got it in May. And I'm telling you, like, we could not find the top of the rental market. Like, we just kept raising rent, not on like the current residents, but we were turning units constantly, and so every new unit was like, let's try 1,100. Let's try 1,150. Let's try 1,200. Let's try 1,250. I mean, we just kept going up. And then toward the end of 2022, that stopped. And then we went into the winter, and normally winter is a harder period to rent in, right? So we saw that come way back down, and it like came back down to like 1,100 or 1,150. And it's really kind of stayed there almost ever since. Like, we have not seen, I say that it kind of did go back up a little bit in the spring and summer, but we're really preaching to our property management company, because I really do see a recession coming personally. I don't have a crystal ball, but I'm worried about it. So I'm just telling them, I'm positioning them, we don't want to push so hard. So when you're real aggressive, Yannick, what we kind of do is, like, if we've got somebody in our property and we buy the properties that we've bought over the past couple of years, kind of answers some of your question too. We've bought properties where, like, the average rent, the one we just closed on, the average rent was $664 for 2-bed, 1.5-bath townhomes. We think the market rent is $1,000. So there's a lot of room there, right? So what you do there is if somebody's paying $650, you raise the rent $50, or maybe you raise it $100. It depends how aggressive you want to be. So if we feel like there's tons of renters out there, it's a hot period, you can rent anything, we're going to push those people pretty far, because we don't mind if they leave, because if they leave because they say, hey, I can't afford $750, well, someone's going to come in paying $1,000. But we're just getting to the point now, Yannick, we're just not pushing so hard. So we don't want so much vacancy, because we're not so confident there's so many people out there that are willing to pay $1,000 or even $950 or $900. So we'd like to keep a few more people. And if you can get $50 more in rent, that's a win, right? So we're gonna increase rent, because hey, $650 for a 2-bed, 1.5-bath townhome, it's way too cheap. That's way beyond market. So we're gonna raise people's rent and kind of some significant bumps, but probably not as aggressive as we were, because we know people are more likely to leave now, and it might take a little bit more time to get somebody in. And then, the way we're adjusting too, is like, hey, our pro forma said we were going to get 1,000, but we said we were going to get 1,000 within like 3 to 5 years. So we've got some time to get there. So if rent pulled back and market rent went down 10%, instead of 1,000, it was 900. Well, again, like I told you, our average rent's 664. So we're still working our way up. Like, we're still bumping everybody up, moving up. And I think, we go into recession. I think it'll last a couple years, whatever. And then we'll be back up to 1,000. So, and that's going to be, 3, 4, 5 years from now. So we're definitely downshifting and not being as aggressive on our lease renewals and pushing people's rent as much. And then we're just prepared where, hey, if we think we might get 1,000, hey, if we got to drop it to 950, that's okay. That's still within our plan. We're doing fine. If we got to drop it to 900 eventually, we'll do that. So we're feeling pretty good. And we just, you got to see how the market reacts. If you got a unit that's sitting, you're going to have to lower rent. I mean, I would rather the unit be filled than sit vacant. I tell our property managers, and like I said, now we're doing it ourselves for our newest acquisition. The difference between $0 and $900 is a lot more than the difference between 1,000 and 900. So if we got to drop the rent at 100 for it to not sit vacant, that's cool, right? Like, give me that $100 difference, not that $900 difference.
Yeah, man, that's so true. We're doing the same. I think at this point of the cycle, how we look at it is, we're not really too aggressive on value add opportunities, value add business plans, but more so focused on high occupancy, delivering cash flow, and kind of providing a nice quality experience for our investors. I think, to your point, it's and that's a role of an asset manager as well, right? It's to know the market, to manage occupancy, to know when to push, know when to pull, know when to stop, and overall, your properties are always better off filled. It's as an investor, yes, you do want to execute the business plan, and you want to get the exact returns that you said that you were going to get for your investors. But the reality is that you're either going to be above or below pro forma, right? And sometimes the market is just a market, but as an operator, it's incumbent on you to really follow the market and just focus on the leading indicators that would allow you to progress within your financial, pro forma, or your property's operations, vertically, right? And number one, it's maintaining occupancy. That's how you
vacancy
do it,
is
right?
the biggest killer, man. Vacancy will kill you. Yeah.
Yeah. That's one of the worst things to deal with within just real estate in general. It's vacancy. I mean, vacancy. I mean, we're not to get off topic, but we're seeing it in the office space, right? I mean, all these office properties that are just vacant that were trading like $100 million over last year are now like half the value. So, if any of our listeners are really paying attention to what we're talking about, definitely focus on occupancy, because that is fundamentally what is going to more than likely help you, achieve, whatever returns that you set out for your investors, for sure.
Yep. Man, I agree.
So
Yeah, well said.
what is your superpower within your company? Do you have partners? How is your role, with respect to the operations within, Threefold?
Yeah, good question. I think I have partners, or just one partner, and then my wife too. She's got our kids, and we homeschool. We do a hybrid homeschool program, so they're her first priority. as far as, vocation goes, but she does help me in the business a lot as well. So she's not my main partner in the business, but she's my boss, if you know what I mean. But my superpower, I think I'm able to kind of see like a big picture and break it down and not get overwhelmed by something that would be overwhelming to most people. And it's not like I'm not like tougher than anybody. I can kind of break things down and just take it one, like the whole like, hey, how do you eat an elephant? Well, one bite at a time. I'm just pretty good at that. Like, okay, yeah, there's this great big elephant there. It's going to take forever to do this, but like I'm able to kind of block it out and just focus in on what needs done, and then pretty good at like deciding what needs done. Because when you go to buy an apartment building, it's overwhelming. I mean, it's daunting. There's a lot that goes into it, and I'm able to just kind of break it down and go, okay, there's a lot, but like that thing and that thing and that thing, I don't even need to do that for a couple weeks. So I'm going to put it out of my mind. I'm going to focus on what I need to do this week. And so pretty good at that and kind of leading the team in that direction. And I think I'm pretty passionate about real estate. I like talking about it. So I'm definitely the one that talks to our investors and spreads the word and tries to bring others in. So that's, I think, a superpower of mine. But I think just seeing the big picture, breaking it down for the team, and being the one that's out in front, kind of taking on the risk and taking on the stress, just because I just kind of handle it better than a lot of people. And because I'm just able to kind of break it down and push off some of it that doesn't need to be stressed about today, and just handle the stuff that does. So I can kind of handle that for the team.
That's fantastic. That's fantastic. And I guess that's why you're the visionary, right? Because someone has to be the visionary. Yep. Someone has to be, the all-seeing eye, looking at everything and making sure that, the company is being ran on full speed, right? Firing on all cylinders.
Yep.
And I think a lot of times, and this goes into my second question, a lot of times as entrepreneurs, we get too nitty gritty in the business, right? And I tell people this all the time, like, nobody is going to care about your business more than you. Nobody's going to care about your real estate company more than you, because you're the one up 90 hours per week trying to make sure that, your properties are performing, you're raising capital, finding deals, all the things that we do as real estate investors. But the challenge is that a lot of times, you're designing a life that is surrounded by like your business, right? Or your business is on the forefront and your life is on the side, instead of like designing, a life around your business, if that makes sense, right? So you're designing a business around your life, but vice versa, instead of designing, your life that's around, your business. Like, talk about how you were able to, or how you're working on that, because I think a lot of entrepreneurs, and particularly myself, I tend to struggle with this sometimes, where I put the business, in front of maybe like my health, for example. So instead of, going to the gym, I'm spending that extra hour like underwriting properties, and I looked up and it's like, oh, well, I should have went to the gym. Like how are you balancing that?
Yeah, I mean, it's an ongoing challenge for sure. And it's something I spend a lot of time, praying about and hoping the Lord would lead me in that, because it is a challenge, because I'm all in on real estate and on the business that we're building. And so, I wake up wanting to do that. And there's other things that are more important for sure. My wife is a huge help. I think having a partner in it is really good, because she, while she believes in real estate and like, she's kind of all, she's all in it, but like she's got herself pulled back from it, and she sees it for what it is. It's a vehicle, but she's not all in on it like I am. So she's great, and often you need that partner sometimes to remind you, sometimes daily, of like, hey, remember, this is more important, this is more important, things like that. I think you got to set up that way at the beginning. So I think it's really good. Again, my wife has been so invaluable in this, but like, we talk about it, at the beginning, right? As we were building the company. And then we spent a lot of time at the beginning of the year, like setting things up, and we just make sure we know, well, this is what's important. So let's make sure we're taking steps toward building a business. So, for instance, we go back to, like early on, it was like, if we're going to be the property managers, because we're doing it all ourselves at the beginning, we're going to spend a lot of time working, and like, we're going to be on the phone, people are going to be calling us. So we knew right away, we don't want to manage properties because we don't want to be the property manager. We don't want to be the one getting the call, the one having to run out the property, because that's going to take away from what we've said is most important, which is our family. And that's not going to allow us to build our business around our family. That was our decision. Other people might make a different decision. They might say, well, Lee, actually, you're wrong because you can do this. Okay. But for us, it was like, if we manage our own properties starting out here, we're not going to be able to prioritize our family. So it's making decisions like that. You got to make those beforehand, because once you get in, it might be too late. I mean, you can go get a property manager, but we made decisions like that. Like that I think set us up to say, and that just, so when you do that, that determines which deals you go after. So that's one thing that really pushed us to get bigger deals, because those are deals that can afford a property manager more than the smaller deals. So it's like, well, we got to go bigger if we want to use property manager. So it pushed us to go bigger faster, which I'm glad we did. And so making decisions like that. And then, but once you get into it, man, yeah, I mean, I feel like there's always work to do. So I can always work. It's just, reminding yourself where your priorities are. For me, that's starting my day that way. I try to start my day in the Word and prayer. Again, try to connect with God and be led by Him and have the Holy Spirit lead me in what I want to do. And then set my schedule, for the day and do like some time blocking, things like that. That like, this is the time I'm going to do this time I'm going to do that. But you got to set it up from the beginning that way, because you can say you're going to time block and do this, but like, if you get into it and like you got to close on a property, well, you're going to do it, right? Like you guys, like you and I, right? If there's something like really has to be done, like we're going to do it. So you got to really set things up from the beginning. You're going to get swallowed up by it, and you're going to be like, well, man, I'd love to go work out. I'd love to spend time with my wife, but like, we're going to lose money if we don't close on this property. So that becomes a priority. So you got to set up from the beginning, and then, I think be intentional each day and time block and things like that.
Yeah. I 100% agree. I think the being intentional for sure, the time blocking for sure. While, we're not perfect, things might happen, deals might come up, we might have to jump to a different task, but I think it starts with being intentional and really understanding that, there is life outside of real estate. And, if you don't get a hold on, creating systems, processes, creating SOPs for your company, you will just very much end up being just a self-employed person, right? And not a
solopreneur.
You're a solopreneur, exactly. So I think, my advice to someone who is starting off in the world of real estate or just entrepreneurship in general is start by thinking that up front, because that is really going to help you navigate through a path that would be which is, what I think, you and I think our listeners want, which is a life by design, right? And so if you're just kind of following the trends and trying to do deals that align with the trends, but not align with how you want to or how you envision your life, then I think you're in for some head bumps, on the way to your success.
Yep. Yeah. Well said, man.
So you've been on this real estate journey a long time. Tell us, give us an example of, something that you maybe struggled with in your business or maybe on the world of entrepreneurship that you had like a breakthrough moment, right? Maybe it was creating the systems and processes that allowed you to maybe scale, or something that, was a roadblock at first, but, allowed you to, turn it around into a breakthrough moment to help you be successful today.
Yeah, for me, like it's been other people. So it's been like realizing my limits and what I'm just able to handle, but also like just my skills, and then seeing that others have skills that I don't. They've got time that I'm only one person, so they can do that. And so when I've added other people, there's Who Not How book by Dan Sullivan's really good, and it just talks about like naturally. Most people want to say, okay, here's this problem. How am I? There you go. Yeah. How am I going to overcome this? And instead, you should be saying like, who maybe can do this for me? And it doesn't apply in every situation. And certainly, as you're starting out, you're probably going to have to wear most of the hats yourself. But for instance, when we had the duplex, we managed it ourselves. And again, we said, okay, we don't want to manage our own properties because we feel like it's going to take away from the lifestyle that we want and how we want to organize things. So we use property management. And when I was looking at getting a 16 unit, that was the first multifamily, it was just so overwhelming to me. But I was still thinking about it like, how am I going to manage this 16 unit? Once I really understood that somebody else was going to manage it, and it was a company that was managing 1,000 units in that same city, I realized like, managing this 16 unit is going to be so easy for them because they manage 1,000. For me, I had managed a duplex. This was 8 times as big as anything I'd ever done. For them, this was 1.6% of their portfolio, right? So that was just a real game changer for me. It was like, this is overwhelming. I don't feel like I can do this. And then I'm like, I don't have to. Somebody else is going to do it. Now, I still was managing them, still doing the asset management, all that. But the day-to-day, man, the stuff that was like really daunting to me, like going out and talking to all the residents and making them all pay, it was all them. They did all that. And I've continued to experience that with, just within the business. So mentors have really helped me get past some of these. But yeah, when you add, that was a roadblock for me to think like, again, just a 16 unit just felt so overwhelming. But once I realized I had that partner that was going to do the day-to-day stuff that seemed overwhelming, I was like, okay, then I guess I can do this because they're really the ones doing it. Right. Yeah. So that was really got me over that.
That's fantastic, man. That's a great story. So if you were to start this marathon all over again, what's one thing that you think you would do differently that would contribute to your success?
Yeah, great question. I wouldn't do a whole lot differently, but I would network earlier. I think, sure, like adding, I feel like what I was just talking about was like adding team members. And again, these people weren't like on my team, but I consider them on my team because they were managing my properties. That's big. But just even talking to people, I mean, there's been times I've had conversations with people and someone would change my mindset. And it's like a speed burst. It's like skipping a couple levels in the game. You might be going along and you can only move from one level at a time. You're just compared to like a video game or something, you complete level 1 and you got to learn something at level 1 that allows you to go on to level 2 and complete level 2. But if you've got somebody that's already at level 10, they can't just bring you up to level 10, but they can probably oftentimes give you a cheat code that takes you from level 1 to level 3 and then from level 3 to level 5. There's just certain things even if it's changing your mindset. Another thing about getting that 16 unit, the other reason I felt comfortable doing it was because I had a mentor at the time. And he was just a local guy. I didn't pay him anything. He was running the apartment focus group for the local RIA in Cincinnati. And he'd already bought a 40 unit and a 25 unit. So again, for him to go get a 16 unit was like, yeah, I've done more than this. I've done bigger than this. So yeah, Lee, like here's the offer letter that you send out. Go ahead and sign here and put your offer price here and send that out. That's your letter of intent. And then, okay, purchase, sales agreement. Let me look through that with you and I'll go do the inspection with you. So that guy right there, skipped me ahead multiple levels. I went from a duplex to a 16 unit. A lot of people might not do that, but with a mentor, you can do that. So the networking piece, there's people that you can network with and connect with that allow you to skip levels. And I would have done that even sooner.
Yeah. I think that's one of the bread and butters behind the real estate business, specifically in the world of private equity. You really have to network, and you just never know who you might meet. There might be the next person that will, take your business to the next level, or bring this new idea to you and your company. So you really have to focus on networking in this space 100%. Lee, this was such a fantastic conversation. We talked about your transition from small multifamily to large multifamily, how you got into this business from being a physical therapist, your operations side of things. I know that you have an ebook on your website. Can you share a little bit more on that?
Yeah, it's called 5 Steps to Passive Income for the Full-Time Dad. And yeah, Yannick, like you, man, I'm trying to bring more people into the space of, commercial real estate. I just think it's an incredible investment vehicle. And I don't think everybody should quit their jobs and go do it full time like you and I are. But I do think everybody should try to get into it, some exposure to it. And for most people, it's going to be passively investing. And I just think, most guys and dads, and I'll just speak to them. I mean, there's plenty of women like this too, but you and I are guys, and I'm a dad, and there's a lot of dads out there that really want to provide well for their family. And they say, how am I going to do that? Well, if I want to provide even better for my family, because I want my kids to go to private school, or I want to take some nice vacations and give my kids experience, how am I going to do that? Well, I got to take the promotion. I got to work even more. I got to trade more time for money. And I think there's a different way. I think you can actually, if you can save up some money, you can make your money work for you. And if you can put your money out there and make your money work for you, it might be your money that's making money for you. Like, just raw numbers. If you have $100,000 you can put into investment, makes you 10%. You just made an extra 10 grand per year because real estate pays you cash flow now. It's not just saving up for retirement. It's paying you cash flow now. If you can make an extra 8 grand a year off an 8% return on your $100,000, maybe that is what allows you to take a couple vacations a year so your kids can have some cool experiences. Or maybe that allows your kids to go to private school. And that's just one investment in 1 year. Like, it builds over time. So that's what that ebook's about. And yeah, so if you jump on our website, threefoldrei.com, you'll see that there with some other stuff. And so I encourage people to read it.
That's wonderful. That's wonderful. Well, I'm sure it's a very, very fantastic ebook for our listeners to really pay attention to, whether you're a full-time dad or not. I think there's a ton of nuggets that are in there that will allow folks to really focus on creating that lifestyle by design, right? Which we talked about.
Yeah.
So Lee, again, we talked a lot about, the commercial real estate space, multifamily space. Thank you so much for being our guest on our show. Thank you to all of our listeners out there for tuning in to another episode of the Mogul Marathon Commercial Real Estate Podcast. Let's be great, take action, and remember that real estate is a marathon, not a sprint. So run your own race. Thanks again, Lee.
Thanks, Jan.